Hi everybody, this is Lara at pureelliottwave.com with some free analysis for you today. I'm going to try and get through two markets today, Casper and Waves. Before I do that, just a note about my list. It's still closed. I'm still trying to work through it. I'm on the road. I'm heading south through Colombia toward Ecuador, down to get some surf and waves in Ecuador. On the way, it's going to be a little bit more difficult for me to get free analysis for you done, so that list will be closed until I've worked through it. I'll try and get 2 or 3 done, 2 or 3 done a week, so let's jump into these two. I'm going to try and make this brief. I'm going to do waves first, and when we get to Casper, I'm probably going to make that one really brief because I do not like the look of that chart. Let's do a really quick Elliott wave analysis on waves, and then I'll do some classic analysis. I'm going to start with primary degree because this low here, December 2019, this is a weekly chart, to this high here, March 2022. If I put this up here, I think that's where the first wave should end. That's 73 weeks. How many years is that? 1.5 years. So that's about right for a primary degree. It could also be cycle degree, so future price action would eventually tell us, but for now I'll leave it at primary degree with the understanding that it might need to be moved up 1 degree in coming years. I want to label from this low to this high, this movement as one movement and this movement as a second movement, and I'll show you why. Because when you put this upward movement in a best fit channel, it looks like it's breached. Actually, it could have ended here, but then it would be a severe truncation. So if I put this in a best fit channel, I think this is where the upward movement ends. This movement is all contained within a best fit channel, and this is an overshoot of the upper edge of the channel, really common for cryptocurrencies to end a movement with very strong movement, and here the channel is breached. So this is one wave and this is a different wave of the same degree. So that's why I'm going to label primary one over here, and this looks like a pretty good impulse. Nope, I would want to put, there's going to be an overlap there. I'm going to put 1 here, 2 is an expanded flat. Is 3 going to fit as an impulse? No, I think I want to put 3 and 4 over here. And then, is the third wave going to fit? Looks like there might be a triangle in there. If I put the first wave over here, I think that third wave will fit. Nope, I'd want to put this over here, go away, and this down here. So intermediate 2 and expanded flat, common structures. Let's just quickly calculate the length of B to A. B is 3.02 times the length of A. Longer than the allowed convention, but I have seen in price history of various markets B waves that can be that long in relation to A waves, so I don't have too much of a problem with that. I think that looks okay for a cursory counter primary one. So what the question, and where I would want to spend most time on, is primary 2 over. Well, at first it would subdivide as a expanded flat or a double combination. I'll show you what I mean. Let's try the combination first. This could be, is this a flat correction? Let's just see if B is 90% the length of A. I don't think it is actually. No, it's under 80% the length of A, so this could be a double zigzag. Okay, this would meet Elliott wave rules, but double zigzags usually have brief shallow X waves, and this one is extremely deep. So I think we'd better be better off labeling this a expanded flat. So A is a 3, B is a 3, B moves beyond the start of A, and C would be a 5 and looks incomplete. Unless it's some kind of ending diagonal. I would probably want to have 1 and 2 here, 3 here, 4 here, and 5. Well, it could be complete as a diagonal. Let's save that and quickly look at 5 on a daily chart. So I'll label the next one daily. to have a look at some detail of 5. So let's just focus in on 5. What could be happening there? Actually, it looks like 4 could have been a triangle. Yeah. Could 4 have been over here as a triangle? Is that going to look okay? Let's put those labels in. I don't think it's going to look okay. Okay, this meets the rules for a running contracting triangle. Yeah. B's moved slightly beyond the start of A, so the triangle is running. C hasn't moved beyond the end of A, so it's a running contracting triangle. D hasn't moved beyond the end of B, and E hasn't moved beyond the end of C. I'll highlight this, control click, and put the channel in. This is why it looks all kinds of wrong. E, that's just wrong. Okay, we could maybe do this. That doesn't look as wrong, and it still meets rules. No, it doesn't. Actually, now it doesn't meet the rules, because now, if you put, no, this isn't going to work. This doesn't meet the rules because E, look at the first number, 6.6, has moved beyond the end of C, 6.57, violating the rule for E for a contracting triangle. That doesn't look right at all, so no, I'm not going to see 4 as a triangle. I think 5 may be a an ending contracting diagonal. Let's have a look at that. Nope. 1 has to be over here. 2 has to be over here. This is probably not going to look right at all. Where is my 3? Could 3 be over here? Oh, I don't like that at all. I mean, it could be. Let's put some trend lines in. No, that's horrible. Well, unless 4 moves up to here, an ending contracting diagonal, it could be an incomplete ending contracting diagonal. Or if you wanted to see it complete, 3 can't be over there, it has to be over there. 4 would have to be over here, and the diagonal trend lines are not adhered to. That doesn't breach any Elliott wave rules, but it looks absolutely wrong. That's just not the right look. I would not want to publish anything like that. So it would have to be an incomplete ending contracting diagonal. Let's just jump back to the weekly. What have we got here? Considering primary 2, this is a lower low. I can't see minor wave 5, this last wave, complete. I don't want to label this a double zigzag, W, X, Y. And so I want to label this A, B, C, because it makes more sense in terms of Elliott wave. But this 5th wave just looks wrong. My conclusion is, for waves, I would expect that this bear market is not over. It needs to move lower to resolve the problems with this structure in here. That's my conclusion from the Elliott wave analysis. What about technical? Let's just do weekly. Let's just, first of all, have a quick look at this slow down here. How did volume and other indicators behave? First of all, there's a bullish engulfing candlestick pattern here. It does have push from volume. So this is a sustained low, the week beginning 1st of December 2019. This has been sustained to this date. The low, 0.52678, has a bullish candlestick pattern with support from volume. Volume up off that low was really strong. On balance volume made lows with price. And if we bring a trend line in, that trend line would have given a signal on the week after the low, giving a bullish signal as on balance volume breaks above resistance, this line here being resistance. So on balance volume gave an early bullish signal. ADX indicated at the low the downward trend had only just reached extreme as the black ADX line moves above both DX lines, and after that it started to decline, so it wasn't very extreme. At the weekly chart level though, RSI reached oversold, reasonably oversold. How often has it done that before? Oh, first time in the price history at that low. No bullish divergence. Money flow index also reached oversold. Yes, there was bullish divergence. The close of this week, 0.67794. The close of this week, 0.77207. So here prices closed lower, money flow index is substantially higher, back in neutral territory. That low would have been not easy, but there is some technical indication at that low, and the bear market came and ended with declining volatility as measured by ATR. Stochastics remained oversold for much of the end of the bear market. Let's look at the last low and compare and contrast. This last low here, week beginning 29th of May, looks very bullish, a huge bullish engulfing candlestick pattern which had support from volume, but prices moved on to lower lows. There's no bullish engulfing candlestick pattern in the last completed week beginning 25th of September. This last candlestick here, week beginning 2nd of October, is incomplete. We can draw no conclusions from that candlestick. After strong volume for that bullish engulfing candlestick pattern, prices choppy, slow, overlapping. Upward weeks have stronger volume. The volume profile is bullish, but price keeps on moving lower, falling of its own weight. As price is falling, volume is declining. Price is falling, most likely, due to an absence of activity from buyers rather than increased activity from sellers. That's a shorthand way of saying that, is falling of its own weight. There's some bullish divergence between price and on-balance volume. The close of this week, 8.88. The close of this week, 4.51. Price is closed lower. On-balance volume is a lot higher. There would have been a bullish signal here from on-balance volume. Let's grab a trend line. I can see a little bit of resistance along here. So as on-balance volume broke above this resistance line, there's a bullish signal on this week here beginning 17th of July, but prices moved lower, so that didn't accurately predict a direction, did it? ADX is declining. There is no clear trend at the weekly chart level. The positive DX line is above the negative. If the black ADX line turns up, that would give an extremely strong bullish signal, the strongest signal ADX can give. It hasn't happened yet, but I'll be looking out for that. At this low here, there is now some bullish divergence between price and RSI. It hasn't reached oversold again, but from this week here, the close, 8.923, and this last completed week here, the close, 3.79. Price is closing lower. RSI is moving higher. There's weakness and downward movement. Money flow index reached oversold here, the close, 4.84553. And here, the close, 3.7, bullish divergence between price and money flow index as well. ATR declining, that was normal for a bear market. And stochastics remaining oversold. I'm not confident in this Elliott wave count for Casper. This is a difficult one. This looked like a sustainable low could have formed, but prices moved to lower lows, although it's doing so slowly with bullish divergence, weakness in range and weakness in volume. This downward movement looks weak. It looks like the potential end to a bear market, but I don't think it's over quite yet. That's my conclusion for waves. Casper, this chart looks horrible. Let's have a look. It's just awful. I guess it could be a complete zigzag. I can see from this high A, B, C. This movement looks like a counter trend movement, a three-wave structure, maybe a double zigzag. Let's just quickly put that in. I'll show you what I see. I'll label it primary degree. I can see B as a double zigzag. And C, could that be over here? Or let's bring in MACD to help with this wave count, because I can also see... no. I was just thinking instead of ABC, could it be 1, 2, 3? If it was 1, 2, 3, you would want to see an increase in momentum. This movement, if this is a third wave, should be stronger than this movement, which is a first wave. So 1, 2, 3 should see an increase in downward momentum. If you look at it on the daily, momentum here is weaker than it was here. So I wouldn't want to label that an unfolding impulse to the downside, although the Elliott wave count would fit. It's not supported by MACD. And C looks like a pretty good impulse. I do not like that this has just been permanently in a bear market, starting with the open of 60 cents and now the current close just under 3 cents. It's just done nothing but lost value. This would be an extremely risky option for putting any money into it, in my opinion, and I would not be interested in it at all. Let's have a really quick look at technicals. Bullish engulfing candlestick down here. Oh, I could be wrong. I totally could be wrong. And that's fine. It's happened before. It'll happen again. The bullish engulfing candlestick does not have push from volume. Slight concern. Volume this week beginning 7th of August. Yeah, we're on the weekly. Has strongest volume of recent movement. Price falls. Volume declines. Price rises. Volume increases. Possible that could be a low in place. On balance volume making slight lows. I would be using a trend line with this. I can see possibly quite a nice resistance line here. So it's got 1, 2, 3 tests for resistance. It's nearly horizontal and it's long held. So a break above that resistance line would be a bullish signal from on balance volume, and that could precede or agree with a break upward for price. ADX indicates a downward trend still. It's nowhere near extreme. This is actually a really strong bearish signal from ADX. It is a lagging indicator here. It's based on a 14-week average. So if there has been a low in place on the week beginning 19th of June, ADX hasn't quite caught up. If there's been a low in place there. RSI reached oversold. Hasn't done that before. So this downward bearish market for Casper was deeply oversold. That's bullish. Money flow index didn't reach oversold. It's making lower lows after price has made the low back here. So that's bearish. I'd read that as a leading indicator. ATR continues to decline. There's declining volatility in this market. And stochastics in neutral territory. Overall for this one, volume is declining. And the strongest week in its price history is a doji. My conclusion for this one, I wouldn't want to touch it. That's it from me with some extra analysis. Hopefully I'll get some more done for you tomorrow.